Hello and welcome to our channel. Today, we are going to talk about EPS, which stands for earnings per share. EPS is a key financial metric that investors use to evaluate a company's profitability and growth potential. In this video, we will explain what EPS is, how it is calculated, and why it is important for investors. So, let's get started. First, let's define what EPS is. EPS is a company's net income divided by the number of outstanding shares of stock. In other words, it represents the portion of a company's earnings that is allocated to each share of stock. For example, if a company has a net income of $1 million and 1 million shares of stock outstanding, its EPS would be $1 per share. Now, let's look at how EPS is calculated. To calculate EPS, you take a company's net income, which can be found on its income statement, and divide it by the number of outstanding shares of stock. For example, if a company has a net income of $10 million and 5 million shares of stock outstanding, its EPS would be $2 per share. EPS is important for investors for several reasons. First, it is a key measure of a company's profitability. The higher a company's EPS, the more profitable it is. Investors generally prefer companies with higher EPS because they are more likely to provide higher returns in the form of dividends or stock price appreciation. Second, EPS is an important factor in determining a company's stock price. A company's stock price is often based on its price-to-earnings (PE) ratio, which is calculated by dividing the stock price by EPS. A higher PE ratio typically indicates that investors are willing to pay more for each dollar of earnings, which can drive up a company's stock price. Third, EPS can help investors evaluate a company's growth potential. If a company's EPS is increasing over time, it suggests that the company is growing and becoming more profitable. This can be a good sign for investors who are looking for companies with strong growth potential. Finally, EPS can help investors compare companies within the same industry. For example, if two companies have similar business models and are competing in the same market, investors can use EPS to compare their profitability and growth potential. In summary, EPS is a key financial metric that investors use to evaluate a company's profitability and growth potential. It is calculated by dividing a company's net income by the number of outstanding shares of stock. A higher EPS generally indicates a more profitable company, which can lead to higher stock prices and returns for investors. Thanks for watching, and we'll see you in the next video. If it was helpful, please press like and subscribe.